Okay, let's see what the latest exclusive markets data show. And to explain it all, I'm joined by Neil Wilson, editor of TAC Index, the leading global price reporting agency on air freight rates and calculating agent for Baltic air freight indices. Welcome, Neil. How was peak season at the end of last year?
Hello, Mike. Great to be back on. Thanks for having me. And to get straight onto it, the recent peak season for 2025 was remarkably similar to the previous ones we've had in 2023 and 24, despite what was obviously a year of turmoil with rapidly changing tariffs and trade patterns, and after the end of de minimis. I think we can see this most clearly from our BAI double O chart, which is our global index. This is the average of all global outbound all around the world. And it, as you can see, is remarkably similar to 23 and 24. It reflects on the demand side that demand was still firm, including in e-commerce, if going perhaps on more on different lanes, perhaps less China US direct, more China plus one, which I think people have commented on. Though I should point out both that China US and China Europe lanes, the rates are currently both slightly up, 3 or 4% each year on year. So e-commerce is clearly still moving, both direct and indirect. And to look at this in a little bit more detail, I point you to our BAI 30 chart, this is our outbound Hong Kong index, which is, we look at this quite closely because it's the biggest for air cargo by volume around the world. And that, as you can also see, their least recent peak is very close to the previous 2 years, slightly below, but very, very, very similar pattern again. Underlying it, I think we have more Asia, Europe volume, more intra-Asia volume, more into the Middle East and Africa. Demand and volumes all up a lot on those routes. And on the supply side, I think we've had capacity constraints. Capacity has been constrained by a shortage of new freighters being built and of feedstock for conversions to be done. Plus, a further impact late last year was the grounding of the whole MD-11 freighter fleet after a tragic fatal crash late in the year. That's about 60 freighters, which is about 10% of the 600 or so that there are wide bodies around the world. So to look at some specific areas of strength, one that I would point to from looking at our numbers is Taiwan. And you can see from the Taiwan Europe lane, which is in euros, and then the Taiwan US lane, which is in dollars, that they both have been strong over the year. They're both up year on year, despite a slight drop in the latest week. And that we think reflects the strong market in semiconductor exports related to the huge growth of AI, which is obviously a major theme for markets. Other things of note in the data currently, Seoul is pretty strong, up 8% plus to Europe year on year. Bangkok up 7% plus to US year on year, also firm. Latam still firm or rising. Mexico, Europe, for instance, is up about 5% year on year. And transatlantic rates, Europe, US, continue to be firm, up nearly 10% year on year. So the market is pretty tight overall. And as we noted before, intra-Asia is pretty strong. So one chart we don't tend to look at very much is our BAI 60, which is our outbound Singapore index, because unlike Hong Kong, it's more of a regional index. More of that volume is going within Asia rather than long distance. And that's currently up 23% year on year. As you see, it's quite a volatile chart, but it reflects that tightness in the market in Asia currently.
Thanks for that, Neil. We've seen rates dive in the early part of 2026. Chinese New Year, it falls on February the 17th. That's the official start of the holidays when all the factories close. What are we expecting in the run-up to Chinese New Year this year? Which I'll just say for our listeners, it's fallen 2.5 weeks or so later than last year. So that does skew the year-on-year numbers, doesn't it?
Well, that's a good question. I mean, the rates obviously dropped over New Year. They usually do at the end of that peak season, and volumes drop and rates drop sharply in that period, particularly on the spot side. And what we're seeing, obviously, in the outlook for the Chinese New Year is that the ocean rates appear to be up more and earlier than usual ahead of Chinese New Year. You know more about this than we do looking at ocean. And the question is, I suppose, does that point to the same coming for air freight, which comes a little bit later usually because it's the impact's nearer the time. In previous years, if you look at the charts, we've had a mini peak into the Chinese New Year period, which has been in early February recently. It's usually quite a modest bounce effect. And there's not much sign yet of what might happen for 2026. The market is now in the tender period for forward blocks brace agreements. But as we know, the market is pretty tight, so it could be bigger this time. We could have more of a pronounced effect. That might happen. One big swing factor, I think, might be those MD-11s, which are due to come back on stream. They've been grounded for a while. As you say, there's 60 of those out of a wide body fleet of 600 plus. So they would ease the capacity constraint side and probably moderate the effect. But any delay in them coming back on stream might have a further impact.
Excellent. Thanks, Neil. And what's next for TAC Index?
So for us, we're going to be doing Battlefin Miami in January, and we're going to be doing Manifest in Las Vegas in early February.